Hi, everyone. Today is August 1st, 2018. This is the Huddlecast. I think it's close to episode 30, I think. I'll have to count later, but I just wanted to go over today the OCC banking charter. So yesterday, actually, the OCC group put out a press release that they're going to offer banking charters to fintech companies. This is national banking charters. So this is a really huge deal. What it means basically is it's the end of the state-by-state money transmission applications for anyone that actually gets approved. So the Office of the Comptroller of Currency, U.S. Department of Treasury, they're the one that said that these crypto companies and other fintech companies can apply for special purposes charters that act like a national business license. And so basically means that crypto companies can compete with banks now if they meet all the requirements to get approved. So not surprisingly, the banking industry and some state regulators opposed the decision, but Mr. Joseph Otting, he charged ahead in favor of firms that don't operate like traditional banks. And this special purpose charter, it does require a lot of regulatory hurdles, and I'm going to get into it a little bit, but Bloomberg, in their article about it, they credited companies like Stripe, Social Finance, and the Lending Club Corp as being major players in demonstrating the need to expand the traditional regulations to the new financial technologies. So who is the OCC? They supervise nearly 1,400 national banks, federal saving associations, and federal branches and agencies of foreign banks that operate in the United States. So they're the be-all and end-all of the banking regulation. And their mission or their goal statement is to ensure that national banks operate in a safe manner and provide fair access to financial services, treat customers fairly, and comply with applicable laws and regulations. And you know what? I was really interested when I read that that's their mandate, because I have seen time after time crypto companies getting turned down for banking, and this OCC says, they're going to provide fair access to banking. And I'm from Canada. I'm actually in Canada right now at the Canoe restaurant, but we have the banks have a mandate that they have to serve everyone. Like it's basically like a human right that you get a bank account here. It's not so in America, and but when you read this, you would think, yeah, it is. Everyone gets a bank. Like they have to be fair, but that's not. It's what they say, but it's not what they do. So the controller also serves as the director of the FDIC, that's the Federal Deposit Insurance Corporation, and they're a member of the Financial Stability Oversight Council and the Federal Financial Institutions Examination Council. So that's the overall OCC's rule. And then Mr. Otting, Joseph Otting, the man that's, that we have to thank for this new regulation. According to his Wikipedia page, he's an Iowa boy who made it to the big times. He was born and raised in Iowa. He did his Bachelor of Arts at the University of Northern Iowa, and then he worked his way up the banking industry with a very impressive career and track record. Prior to becoming the controller for the OCC, he was actually the president of One West Bank, which was then acquired by CIT Group. And when Mr. Otting left in 2015, he was paid $24.9 million in compensation for his work over the year of 2015, and also a $12 million severance payment that same year. And then 2 years later, his bank was fined for $89 million by the Department of Justice for its reverse mortgage practices. They weren't compliant with the HUD foreclosure requirements, so I don't know if that had anything to do with him or not, but it's a pretty big fine. And then he was sworn in to be the controller of the currency on November 16th, 2017, after a nomination from President Trump. And he is responsible for overseeing the federally chartered banks, savings associations, and federal branches of foreign banks. And also, he had a kind of nice statement. I thought I read a lot of, I like this guy. Like everything I've read about him is really good. And when looking at his swearing in statements in the ceremony, he stressed the priorities include job creation, economic discrimination, reducing unnecessary regulatory burden, which he's done. Like he followed up on that by putting this through, and enhancing the value of the federal charter. So meaning if you're a federally chartered bank, he wants to make that worth something. Like so basically to improve the reputation of these banks. And he ensures the OCC operates effectively and as efficiently as possible. So how can a crypto company get this special purposes charter that allows them to be the same as a national bank? Well, apparently several crypto companies have actually already reached out to the OCC, and Autumn said that most of them find the regulatory demands disheartening. So whatever these demands are, I really did research quite a bit to find out what was involved in getting this national bank charter, and it wasn't very forthcoming in the actual financial requirements that you need on reserve. But apparently, the crypto companies that reached out found it to be a lot. But anyway, they said on Tuesday, like the OCC in their press release, they said that applicants will be supervised like similarly situated national banks, and that includes capital, liquidity, and financial inclusion commitments as appropriate. And they'll face an initial heightened supervision like any other new bank. And each application will be open for public comment, and the agency will try and make a decision with 120 days of the application. I really hope I come across a client that wants to do this application, because I would love to dive into it and get one of these things approved. I think it would be a lot easier than doing the state-by-state money transmission licenses, and I just think it would be cool because it will be one of the first times a crypto company will have this. And then the banking functions versus money transmission. So this special purpose charter, it's only for companies that are engaged in core banking functions. So they have to be lending money, paying checks, or what probably will apply for crypto is taking in deposits as described in 12 CFR 5.20E1. So if we're think of it like Coinbase. They're taking in people's money. That's the function of a bank. That's a clear banking function. So Coinbase would be, in my opinion, Coinbase or Bittrex would be like the prime people that are situated to get one of these right now. And they've already got their money transmission applications. But money transmission, on the other hand, it's a license that authorizes the holder to, this is a wordy quote, but to transmit currency, monetary value, or payment instruments either by wire, facsimile, fax, electronic transfer, courier, the internet, or through bill payment services or other businesses that facilitate such transfer within this country or to or from locations outside the country. So, the plain English version of what a money transmitter allows you to do in the crypto field is to move some kind of cryptocurrency through the internet anywhere. It's that broad. And you need it, it's regulated right now by the states. And, this has been one of the most highly criticized areas of regulatory oversight in cryptocurrency is this state-by-state money transmission. And one article I found really put it nicely. I'm going to read their quote. They said, "Balkanized money transmitter regulations have thus become one of the main impediments to startup growth. While federal regulations are broad, the real pain point rests with the legal minefield sown by the states. State regulations are a challenging trifecta of broad money transmitter definitions, expansive jurisdictional assertions, and inconsistent approaches to exemptions. This does not even include the wildly different requirements each state may impose on the same startup. With access to financial services shifting to mobile platforms, startups have to be prepared to serve consumers from far-flung states and comply with a unique set of regulations in each state. Now, companies who obtain the banking charter will be under federal banking jurisdiction through the OCC, so it should be a more streamlined process. We'll see how it actually plays out in reality. And what do you actually require to get one of these banking charters? Well, you have to submit the application to the OCC. And they've stated that they look at the company's business plan, the management team, and the financial resources. And these financial resources need to be strong enough to support the bank through tough markets and meet the OCC's capital requirements. And the capital requirements are assessed on a case-by-case basis. I really, really want to know what they are. I looked for it. They're not written anywhere. So I guess it's, based on how much money you're taking in, lending out, they calculate it. And if anyone knows or has a ballpark, please put it in the comments. It's just interesting to know how much money do you really need to get one of these. So some of the things that go into the case-by-case analysis to determine the capital requirements include the proposed business plan and the risks, the management skills, expertise, and abilities relative to what's required to execute the plan successfully, prevailing economic conditions and competition in the proposed market and nationally, and the bank's ability to raise capital in the future. So a de novo application, that just means a brand new application in Latin. It has to be approved by the OCC, the FDIC, and if they have any kind of bank holding company component, it also requires a filing with the Federal Reserve. If it's a conversion application, so you're taking an existing chartered company and applying for the national charter, then it also has to comply with the Dodd-Frank restrictions that require an additional OCC filing. So it looks like it might be easier to start brand new, but anyway, then this means crypto, it's going to have to, sorry, I think I might have misspoke when I said it's easier to start from brand new, because I did read one article that said what they think this is going to cause is that crypto companies are going to start buying existing nationally chartered banks. So, Coinbase will go and buy some bank that already has this charter, and then they get the charter rather than applying to them. We'll see. No one knows yet how it's going to unfold. But basically, I think this means crypto moves from being the wild, wild west to mainstream banking. So all the safety and protections that come with using a chartered bank, they'll be available for crypto people too. So it might give it more legitimacy. And then what happens if you actually get the charter? Well, I think one of the most exciting things for the chartered bank would be that they get a special tax rate, and also they get to work with the OCC and have a clear, consistent set of national regulations. They're forced to participate in community reinvestment, and they're also subject to community reinvestment exams. And then the ratings of these exams are publicly available, so people can see, how each bank does. And you're also you've got to comply with consumer information security, privacy, anti-money laundering laws, and all other laws that a national bank has to comply with. And you're subjected to the OCC's enforcement powers. So if you don't comply with, say, the anti-money laundering policy, you can be levied a pretty hefty fine. So I think this is good to keep the landscape fair if they actually fine people or, enforce it. That I'm not 100% sure how they actually, do any enforcement actions. But if they're applying them consistently across the board, then it's going to create a pretty good incentive for companies to actually comply with the regulations and everyone to comply. And then, so why did the OCC decide to include fintech companies? Well, Mr. Otting said companies that provide banking services in innovative ways deserve the same opportunity to pursue business on a national scale as the federally chartered banks. And before announcing this decision, the OCC has made several publications and outreach to companies as though they were key stakeholders in the game. So they started looking into this in 2016, and they publicized this report called Exploring Special Purpose National Bank Charters for FinTech Companies. And they opened that up for public comment. And then around another year later, in March 2017, they published the Controller's Licensing Manual Draft Supplement evaluating charter applications from financial technology companies. So this move was very calculated. It has had a lot of research, public comments, and it was decided that it is the best route forward, which I agree with for sure. And then there is a little bit of backlash coming. John W. Ryan, who's the president of the state regulators group, he said that the new charter is, an OCC fintech charter is a regulatory train wreck in the making, and he's keeping all options open to stop this kind of what he called regulatory overreach. How on earth is this regulatory overreach when the company has to pay millions of dollars probably to apply for this thing? It's not the OCC isn't coming out and saying, we have jurisdiction over you, you have to apply for this national thing. It's saying, if you want to spend millions of dollars, you can apply for it. So there's no regulatory overreach here. This is a self-selection if a company wants to apply for the charter. He's just probably either, some people are just scared of cryptocurrency, and he's probably one of those, like Sherwin or the bank officer I met with this morning, who didn't, he told me that they exclude is a smaller bank in Tampa, and they said that they can't open banks for strip joints, marijuana companies, and blockchain companies. I was like, oh yeah, great to lump all three of those in one. I couldn't. Anyway, not that surprising, but and okay, getting close to the end here. So the FDIC, so Mr. Otting, he's also the director of the FDIC. So I was wondering after reading this, if it's possible that they get approved for the special purpose charter, if they can also get FDIC insurance on the cash deposit. So something like your money market account at Coinbase, can that be federally insured up to $250,000? Crypto itself could never be insured. Well, never say never, but traditional things like stocks or mutual funds aren't insured either. The insurance is just on cash, bank deposit accounts, CDs, money market. But I think it could work for the cash account at Coinbase. And Coinbase says it already has some insurance, so maybe it's already there. But it would be interesting to see that. I think having some kind of insurance would probably make people more comfortable investing too. But in conclusion, I think this is an overall positive for the crypto space. It's probably going to play into when we eventually get the hedge fund, or the ETFs and stuff like that. They can say, well, that company is operating under the same regulations as a national bank, and it's just going to make things more legitimate, which helps things move forward. For some of the larger companies, like basically the main people I see this being good for is like Coinbase, Gemini, Bittrex, Circle, the big players, and basically it could drive up the price of Bitcoin as more and more people drive in. But ultimately, for Bitcoin, this doesn't matter. It's by its very nature, Bitcoin is outside the power of any country's regulations. So whether or not this is like the people that sell Bitcoin, it's great for them, but it won't affect Bitcoin itself that much, just the regulated access point. And I guess the more people that are operating under these kind of regulations, the harder the anonymity becomes, because when you have a bank charter, they need to know who it is that's transacting, and also they're going to have to comply with tax laws the same way that any other bank would. So any buys or sells will certainly get reported. But that's all for now. Thank you, and have a great day.